Stock, crypto, and options trading has large potential rewards, but also large potential risks. You must be aware of the risks and be willing to accept them in order to invest in the stock, crypto, and options market. Do not trade with money you cannot afford to lose, and this is neither an offer to buy, sell, or recommend a particular stock, crypto, or option.
Stop me, 'cause I'm having a good time, having a good time. A shooting star leaping through the sky like a tiger, defying the laws of gravity.
All right, everybody, it's that time of the week. It's Monday morning, 9 a.m. Eastern time. And we're going to have a good time today. There's tons of fish that are about to jump in our boat. So welcome, everybody. Just checking in. Hey, there's Andrew. We got Dave and Jim and Dan, and good to be with my family, and Jack from Texas, from Dallas. Football season is about to approach. We got Leo and Paul. Where are you at these days, Paul?
Sitting in the back of the kitchen at work.
Oh, that's the coffee shop restaurant that you have?
Yeah.
Yeah, awesome. We got
But
Leo, Johnny, Jessica. Welcome, everybody. Let's get back in. Let's go into the markets and see what's up for today. I've got a little bit of a lesson, not too much of a lesson, that I want to share with you today. And I've got 3 opportunities I really like that we're going to talk about here in just a few minutes. Pre-market, these are pre-market trades. We'll look at our portfolio as well in a minute. Let's go back. I'm just going to check. This is what I do every morning. You know, I put on CNBC, but I find it hard to listen to. So I'd like to go right to the news and just taking a quick look here. I didn't see a whole lot this morning, at least in the news. This is a cool little free article on CNBC, 5 things to know before the stock market opens. Slow start to second half. So futures are mixed this morning. The thing that everybody's watching at the moment is, remember last week we had a really strong jobs report. The ADP jobs report came out super duper hot, about over twice what was expected, and new jobs being added. So that's not good for inflation. And then the market's bullish run got stalled. And this week we have 2 reports coming out that are really important. These are 2 key inflationary reports. The CPI comes out Wednesday morning at 8:30. We got jobless claims on 8:30 on Thursday, as well as the core producer price index, the PPI and the CPI, Wednesday and Thursday of this week, and jobs claims on initial jobless claims on Thursday. We could very well see movement, and certainly that will influence what's about to happen in a couple of weeks. The Fed meets on the 25th and 26th of this month, just a few weeks away, and a potential rate hike on July 26th. All indications appear that although last June was the first non-rate hike out of the last 10 meetings, it looks like they're going to get back on that train on Wednesday, July the 26th, and probably lift rates, I would guess, 25 basis points. And these reports that come out this week will have a lot of bearing on what the Fed decides to do next week. So that's what we have on store for this week. And, you know, a lot can happen. A lot can happen with these reports that come out this week. Now, it could be a positive or negative. We could see a big run bullish in the market, or maybe another little bearish leg in the markets. Let's go to our futures. You know, I haven't done this in a while, but this is the futures to watch. So one thing that I always do, and you should be too, is take a look at all the markets. You know, the S&P, Dow, NASDAQ, Russell 2000. Look at those 4 major market indices. Look at oil, gold, silver, bonds, the US dollar, and Bitcoin. And the futures here, these trade from Sunday from 6 to Friday between 5 and 6:45, depending on the instrument. So these run 24 hours. And right now, because the markets aren't open yet, we can still see the futures and get a feel for what the market's about to do in 25 minutes. You know, we'll know how it's going to open for the most part. So the ETFs as well are shown here. This is a slide that will be in the recording, and you can come back here and grab these if you don't know these already. These are the ETFs that we can actually trade options on. So sometimes we look at these futures on Monday mornings, and if we want to trade it up, we could very easily find a trade on the SPYs, and we could place the trade on the SPYs in the morning, and have the futures tell us what's going to happen in 25 minutes. So that's the idea. So let's go do that right now, and let's start with the S&P 500. And you want to talk about resistance? I mean, good gracious, 4,500 is resistance on this on the S&P 500. Currently today we're down a little bit. Okay, we got strong support at 4,400. I would imagine, I don't know where we're going to go today. It looks like we might get a bit of a bounce based on the pre-market, pre-stock market movement here. Little hammer pattern. I would expect 4,400 to hold for now anyway, and then maybe some support here around 43.70. Certainly 43.50 is a super duper strong support level. So I don't know where we're going. Does anybody? At least for today, NASDAQ, the tech heavy on fire NASDAQ, almost the same pattern, strong resistance right up here around 15,500 or so. So for me to have a decided bullish prognosis on the NASDAQ, then I'm going to want to see it above 15,500. This round number resistance level right up here. So there's the NASDAQ. Yeah, I don't know where it's going either. What about the Russell 2000 small caps? Now this one I might even do something with. And the reason I say that is we had this blast through the 200-day average. And since that day there, the Russell, the smallest 2,000 companies in the US, has been well above its 200-day average. So these are the kind of trades where, you know, I'm like counting on support to hold. And what's really great about maybe selling a spread under here is that you have various support levels, you know, round number support levels, 1860, 1840. And then down here at 1820 is another one that is super strong because we have both the 200 and the 50-day average converging right there. I would feel quite confident in selling a credit spread right there, a bull put spread, sell the 1820s and buy the underneaths, you know, whatever strikes underneath. I'm not going to do this trade today. I might. Well, if I didn't have three other great trades, I probably would do this trade because of this, what's called a golden cross, as the 50 crosses above the 200, right at 1820. And this thing hasn't been below 1820 for over a month. So that's a nice level of protection under which to sell. I would sell 1820s. Well, heck, since I'm doing it, let's just do it here. And we got well, I gotta pull up the ETF. IWM is the ETF. I don't have options on futures. I don't trade futures options. So we have 3 expirations. We got today, Wednesday, and Friday. So typically we go Friday. And so again, the trade that I would consider doing on the IWM would be to sell the, let's say 179 or 180. We can make it even safer. Let's change this to vertical. And we'll sell, let me see, 179 is where I'd like to go. So there's 179. And that's going to give us maybe 7 cents of credit on 53 in risk, which is not a bad return. It's what, it's 5, yeah, about 15, 12, 13, 14, 15%, somewhere in there by Friday, provided the IWM stays above here. Hey, sorry, I got a dog visitor. So yeah, that's a great trade. So let me give you that one. I'm going to post it in the Sniper WhatsApp live feed. I'm off script. I'm off script, but this is how trading works. I think the best thing I can do for all of you is to just to follow the flow, and the flow here says a nice looking bull put spread on the IWM. I'm going to post this in Snipers. These are the strikes I like. If you want to play with that one, please feel free. All right, now I got to figure out where I was before I went down that rabbit hole. But man, it's a good trade. It's a good trade. All right, those are the four corners. Oh, we have to look at the Dow, the /YM. Yeah, it's right off the 50-day average here. Similar pattern to the other indices. Strong resistance up here around 34,700 or 34,700. But it looks like we got a bit of a bounce coming here today. But again, you know, with these reports coming out Wednesday and Thursday, I wouldn't expect the markets to start setting new highs, nor to drop significantly between now and Wednesday, Thursday. Okay, what else? Let's look at gold. What's gold doing? Well, gold's down a little bit today. I don't have Forex on Thinkorswim, so I can't show you the US dollar futures, but gold is down presumably because the US dollar is up a little bit this morning. That would be my guess. In fact, let me go to the UUP here. This is the US dollar ETF, and I can get a pre-market here. So pre-market, yeah, so you see here, UUP closed at 28.23 on Friday, and now it's slightly higher, around 28.32 or so, mid-price. So US dollar has in fact gotten stronger, and that's the reason that gold is down a little bit today. Okay, what else? Let's look at bonds. You know, it's you know, Andrew Batman Taylor and I are think alike in a lot of ways. And, you know, we knew that the Fed was going to lift rates before the jobs report came out last week, the strong jobs report. We knew it was coming. And then like a cat chasing a laser pointer, the markets say, all right, I guess that news is important. And then bonds drop. Why are bonds dropping? Because of the expectation of a future interest rate hike. And that has the downward pressure effect on bonds. So I would say bonds will continue dropping from here until the 25th and 26th. We are at strong support here. I would consider going bearish on bonds with a close below these points here, which is like 122. So I think we're due for a bit of a bounce right at this support level. We'll see. But if it breaks below, come in and sell a bear call spread up here. If you're trading broken wing butterflies, and some of you are, a bearish broken wing butterfly on the TLT looks like a really good idea to me. TLT, there's the TLT, the ETF that tracks bonds, but boom. Now it has come down hard. We don't like gaps with, well, I'm not going to talk about broken wings, but be careful. If you're a broken wing butterfly trader, be sure that have some level of confidence that these gaps aren't going to happen. Those don't work with butterflies, but credit spreads, heck yeah. Sell a credit spread up here somewhere above the 200. That would be a good trade for today as well. If you can get any premium, maybe even longer term, sell a credit spread above this 200-day moving average. With the drop in the stock, the IV is elevated. So you can sell more expensive options and get the short strike further away from the heat being the stock. So there's another trade. There's just so many. There are so many trades. Always there's trades. Always. Oil, choppy sideways, channeling between 74 and let's call it 67. All right, so there's a nice channeling stock there. 74 strong resistance. We break above 74 and close there, then we have a good shot of coming up here to 77. So one way to trade this one, everybody, let's go to the USO real quick here. What you could do with USO, which is the ETF that tracks, is, you know, wait for this resistance level to hold. Currently, the opening price is just 20 cents lower than Friday's price, so it's kind of right here at the open. If you do get this channel if this upper resistance holds and the stock begins to drop further, then consider selling a credit spread up here and maybe even one down here as well. So, but I'd wait. You got to wait to see if this resistance level is going to hold. I think it will. It will, unless it doesn't. Let's look at VIX futures. Yeah, not much is happening. VIX futures are a little bit lower than Friday. So yeah. Not much happening there. Options are actually quite cheap. Options are really cheap right now because the VIX is so low. Let's look at the actual VIX here. Yeah, low. When the VIX is low, it's time to go. That's not always the case, but every time markets that have been rushing up correct, the VIX is always low. So this doesn't cause it. The low VIX doesn't cause a market correction. It's present when there is one. So you want to keep an eye there with these options so cheap. With the overall expense of at-the-money options on the S&P 500 being so cheap, maybe there's a correction coming. And we'll know in the next couple of weeks with the Wednesday and Thursday reports, as well as the Fed coming out the 25th and 26th. Natural gas, we have a vested interest in natural gas. We have a long-term credit spread that we'll look at here in a minute on natural gas. I've got 15 minutes and so I'm going to need to go faster here, but we got a credit spread underneath here on UNG. We've been really killing UNG. So we have a credit spread under here right around 650. And notice the 200-day average, 50-day average, excuse me. The 50-day average is currently acting as support. This stock hasn't been below the 50-day average since June the 15th. So that's almost a month of being above the 50-day. Good chance that will hold today. Okay, let's look at our portfolio. Yeah, more winners. This one I think is, I love this one here. This is on AstraZeneca. And we placed this Monday morning right at the market open. And we got in for 18 cents credit. Now, we closed it the same day. We were able to sell this spread for 18 cents. And I think it was at 11 o'clock, our exit order fired off. And we bought this thing back for 2 cents, netting 16 cents in about 2 hours. So let's see. Let me see, the legs are all a little bit messed up here. Let's see. Let me turn off. Yeah, let me turn off these here because these are on the same day. I mean, it's like, is this real? Is it possible to generate around 20% once you buy the spread back in a couple of hours? Yeah. Pre-market, the stock had dropped. And we sold this credit spread when all Armageddon is happening and options traders are going, oh crap, the stock's tanking. Let me buy and sell some options. And then within an hour or so, all that IV from the excessive demand dried up and we pulled this trade off in a couple of hours for about 20%. In the chat box, and Gerardo, if you could monitor it for me, I'd appreciate it. In the chat box, please let me know. Did you participate in the AstraZeneca trade or even the Tesla trade? Same deal. We got in on the 3rd. And remember, the 4th was a free holiday, a free day of time decay. Actually, the 3rd was a half day. So we got an extra half and one and a half days of free time decay. And then by Wednesday, we got in on Monday, and by Wednesday, we bought it back for 2 cents. We bought it back for 2 cents, says Captain Kirk. Look, this is what we ended up making on this one. Let me turn off the, go to the actual exit date. Yeah, this wasn't a huge winner. We made about 8% in 3 days with super duper high probability of profit. Well, that's how we roll here. Then we also have, let me refresh this here. All right, and then we also, so those trades are closed for profits already within both within 3 days or 2 days of placing the trade. And then this is the long-term credit spread that Jeff found for us on UNG. So this is a longer-term credit spread. It expires in 35 days. And what we're counting on is 650 holding. Go back to the chart here. We're counting on 650 holding right under the 200-day average, or 50-day average. It's either going to hold or not, but if it doesn't, then just hold on to this and be prepared to take stock. If you have, and if you do that, make sure that you don't obligate yourself to buy too many shares. So this would be 1,300 times 6.5 is your approximate cost to own the stock. So if you like the strategy of just setting it, forgetting it, if the stock continues to rise, we'll make 30-some%, buying the spread back for a penny, having sold it for 12 cents. You know, you grab a nice little profit. As long as the stock stays above 650 by August the 11th, then you're going to make, after you buy it back, about 30%. What? In 45 days? Well, not even 42 days from when we placed it on the 3rd. Yeah, that's the deal. So I like these, especially if you're willing to take stock. And if you take the stock, just hold it. UNG is a commodity. It will not go to zero unless people stop using natural gas. Is that happening? No. So that's the idea with UNG trading at such low levels. And let's get a larger chart here. Let's do a 3-year chart. I mean, come on. Is that a bargain? Are you okay about holding UNG for what, 630, whatever the net, the cost basis is, the break even? Yeah, I am. And you hold it and you wait. And you wait, sell calls against the stock, and just don't worry about anything. Set it, forget it. On expiration, if you're in the money, take the stock and then sell calls against it and wait for the stock to recover, because it will. It will. It's gas. People use natural gas. Is there a question?
Mike, with that, as we started talking about UNG last week, I looked into that, and as I said to you, I don't think it's going to go away. So right, wrong, or indifferent with our group, but I have started to buy shares in it and selling calls and selling puts to build a little collection of it.
Yeah, I think good idea. Just fundamentally, Paul, buying a stock that's in the cellar, that's a commodity. Do the same thing on oil or, you know, silver and gold at low levels. You know, own it.
Yeah.
Yeah, I like it. I like it.
Thanks everyone for that.
You're welcome, buddy. Yeah, it's just fun. You know what's really fun is when you look at our short-term credit spreads. One loser out of 32. I'm almost afraid to put this up here. It's like, what? I've never seen this perform. I keep saying this, but it's nuts that I need to rerun this. You run the portfolio report, make sure the start date, this is set the current backtest date to today, and set your start date for the scan well before the first trade. Now we started snipers in July 2022. What year is it? Oh my God, that was a senior moment. What year is it? So just make sure the start date is set before the first trade in your portfolio. Otherwise, you won't get the proper number of days in the trade. And so this is what it comes down to. This is how well we've done here. And it comes down to average profit. See, I didn't do get my back test date correct here. It comes down to APL and the number of days in the trade. The average hold time for these short-term credit spreads, and some of them are 2 hours, you know, like the one on AstraZeneca. We're making on average 14.22% every 6 days. You know, you could be aggressive and multiply that by 4. You could take the same money, roughly 445 in average risk, and you could do 4 trades with that money every month. And so then your APL becomes just gargantuan, you know, 14 times 4, 66, 56%. It's just incredible. It's just really incredible. And now we want to keep this going, of course. And with 5 minutes to go, I wanted to show you this website. We're going to talk about this one in a minute. I don't have time, but I'll do the summary of what we're about to cover here in just a minute. But before I do the summary slides, I want to find some trades. So if you go to BAR, there's a lot of places to find this information out, but if you go to barchart.com and you click stocks, and then you click pre-market trading, and this is where the juice is in the morning, finding stocks that have gapped up or gapped down pre-market. And so when I go here, I'm always looking at the price. Now, generally, $5 is the minimum price before any of this makes any sense. All right, so if I'm looking at this, I would only be considering Nanobiotics. This one on IEP, I checked that one out earlier. CD, China, Helen of Troy, this one I like. We're going to talk about that one. And then down below, same thing. And one here that I like is Advanced Auto Parts. Now, although the stock hasn't gapped down that much, there's a reason I like Advanced Auto Parts. And the other one, I believe, was FMC. Let me consult my notes. Yeah, FMC. So right off here, we got three potential opportunities. Now, the one I want to start with is FMC. Let me show you why. So you want to check the news here. And what's important to note is that not all these necessarily have options. So before you get too excited, let me take this to a daily chart. Before you get too excited, make sure it has options first. I've done this the wrong way around, where I'm looking at what I think are great trades, and then there aren't any options. So check that first before you get yourself invested in this as an opportunity. All right, so it does have options. Slippage is, I'd say 20% max. That's $3. I'm not too worried about slippage on these. In fact, I'd say a good rule of thumb is make sure it's 20% or better. Normally it's 10% for us, but on these in the morning, we're going to be able to take advantage of that wide slippage and get a fill with all this crazy news. So we'll go through this process on FMC. So here's the stock chart as of Friday. And you can see here, the pre-market price is 96. What? So the stock's down here. It will open down here. If you want to see it in Thinkorswim, you can go to a 5-minute bar or a 1-minute bar, and you can see that's where we were on Friday, and this is where we are today. All right, so you can actually see the chart, or you can just look right up here and estimate where the stock is going to open. Now, if you look at the news, now this is really important. The sniper approach is to find stocks that are moving big, and preferably on really good news or really bad news. And so this is the worst news the company could put out, in my opinion. FMC slashes outlook, didn't lower it, but slashed it amid abrupt customer inventory reductions. Okay, bad news. There's blood in the water. Let's snipe some profits. You gotta have one of these around so you can wipe the saliva from the corners of your mouth. It's really important that you get one of those. So now with the stock at 96, where am I going to sell? Well, support and resistance. Find a support and resistance level that would make some kind of sense. And I'm thinking right here at 102. The stock's at 96. The danger would be that the stock would close above 102. So that's as close as I would get on this one. And maybe a little higher depending on what we can get. So 102 is where I want to sell. What's available though? You go back to trade. Now this is going to have to be a 2-week trade expiring on the 21st. So ideally it's a 7-day options, but we'll get more premium here. And now if I look here, I can't sell at 102. Let's change this to vertical. Now the stock is at 96. That's 10 points lower. All right, let's just see what it comes out at here. I would sell the 100 if we got enough credit. Let's try to sell the 105. Let's go as no brainer as possible. Now, I'm going to put an order in. So I'm going to guess the rough credit on this trade would be 10 points higher. I don't know how much we're going to get here. The option price, the options haven't opened on this one just yet. So I'm going to put a line in the water for $1. We're not going to get $1. I'll tell you what, let's do 50 cents. The prices will open up here in a minute. All right, now why am I doing 50 cents? Well, for a $5 spread here, 50 cents would yield $4.50 of risk. You take the distance between the strikes, 5, you subtract the credit, 50 cents to get your risk, $4.50, and then you divide 50 by 450, and then your rough return on investment is about 11%. I'll take that over 11 days. I will. Okay, so now the mid price is at 60. It just came up. I'm going to go for 60 here. Oh, I got to get my contracts. I'm only going to do one of these because I want to keep my risk down. Now it's at 77. Good. Let's go for 80. Are we going to get filled? I don't know. We're going to now it's down to 17. See, it's a fast game. Let's ask for 50 and see what we get.
Mike, what strike prices are we using?
105. I'll put it in snipers. 105 is the short, and then 110 is the long. Sell the 105 call, and then buy the 110 above. I'll put that here in snipers if you have access to that. And it's already down to 7 cents. We're not going to get it. Now, had I not been speaking, I would have had that order in before the market, and we might have had a shot at getting 50 cents when the feeding frenzy starts immediately when the market opens. At this stage, at 7 cents, 50 cents is my minimum. I'm going to hit confirm and send. Now, the one other thing we could do, let's take a look at the stock chart. Okay, now it's bounced from the open. 105 is up here. Yeah, I don't want to sell at 100. You see that? The stock's, you know, it opened here and it's already higher for the day. It looks like it might very well have a bit of a run up over the next half hour or so. If you see a stock that tanks and then keeps going, that's ideally what we want. So it looks like there's a bit of a bounce here that's happening. And for that reason, I'll just leave this sitting out there for 50 cents one time. And that's so far away. Go back to monitor here. Yeah, it's already down to 2 cents. So we're not probably going to get filled on that, but let's go find another one. Here's the other one. Yeah.
We have a suggestion from one of our newest students, and a brilliant one. It's Jessica. She say, I have something I think we can make some money on and not hold on too for long. I think Matt will go up even more with the new Barbie movie. I just can't find the best trade to make on it.
All right, yeah, let's look at that one in just a few minutes, but I want to get this other one off. I got 2 others, and then we'll come to you, Jessica. Thank you for the heads up. Here's ADP. ADP's down today. It was on that list. AAP, excuse me. Advanced Auto Parts, AAP. So now I don't like it as much anymore. What I did like about it, it was on the list. It's got some bad news. It got downgraded from neutral to underperform. That's just shy of a sell rating. And companies, that's not good. That's bad news. And so although the stock hadn't dropped that much at the open, it is recovering. What I thought would be a good trade would be to sell a call spread right at resistance. So resistance being 70. Now because the stock has bounced, I'm not as excited. I do think 70 will hold, especially given the underweight rating, which is terrible for a stock. Doesn't look like the stock wants to go anywhere. 70 strong resistance. So the trade here would be, and I don't like it right now, so I'm not gonna, I'll just tell you, let's take a look. I don't like it because the stock's rising. But the idea here would be to sell a Friday trade where you get 17 cents and risking 43 cents, which is, 20% roughly, 20, it's close to 25%. So it's a nice little return between now and Friday. Let me put this one up here, but I don't like it because the stock bounced after the bad news. So let me put it up there as a case study. The other thing you could do on this one would be a calendar spread or a condor. And I like a calendar spread right around 65 or 70. And this one's a little aggressive. I do like it. I think that we're going to be fine if we sold a 70 call here. But this would be a good candidate, as I was saying, for a calendar spread with the short strike at 70, with the both strikes at 70, or sell an iron condor between 80 and 60. So we've talked about both those strategies in snipers. If you go to the snipers dashboard, your snipers dashboard, or even YouTube, you'll see those sideways strategies detailed. So check those out. Check those out. Now, the other one I want to cover is Helen of Troy. So they just had earnings. The stock surges after profit and sales fall, but beat expectations. So they beat earnings. You can see what they are here. Now, what I always like to see is a guidance rate lifted. So I'd have to look through here a bit and see if they raised guidance. If somebody could look for that for me, that would be extra, like a cherry on top. But now it's the same thing as before. The stock gapped up after good news, beating expectations. It's come down a little bit. So it's vacillating up here. So the next thing to do is, well, where's support? Where do I want to sell? No closer than 120, ideally 110, 115. So I'm just looking at support, 110, that would be ideal. If we could get a 110 credit spread, that would be ideal. Let's see what's there though, and see what we have to play with. So I've got the in Thinkorswim, I've got vertical spread shown. Look at that slippage is nuts. All right, so slippage is so wide right now. We're not showing a mid price of $1.98. They're not going to give that to you because that would guarantee you a 98 cents profit. If you sell a $1 spread for that much, you have a guaranteed profit. And then brokers won't do that for you. Unfortunately, they'll do it the other way around. They'll let you buy a spread for more than it's worth. They'll do that for you. All right, so the mid price is pretty wide. Let's just see if we can get, I don't know, let's change this to a credit. It's showing a debit because of that gargantuanly negative bid price. So let's see if we can get, I'll put an order in for 50 cents. Let's see, what do we want? 50 cents? No, that's too high. How about 25 cents? Maybe we get filled. I'll take it if you give it to me. But until the market makers normalize the data, we're not going to get a really good reading at what the mid price actually is. So we're going to go for 25 cents. That will leave our risk at 75 cents. That's quite good for a trade that expires on, it's very good for a trade that expires on Friday. Let's take our contracts, 25, that would be 75, 10, let's just do 5 of these. Let me post this one. I'll have to change the price most likely. I'm just dropping a line in the water, see if I get a bite. If we don't, that's okay. Then I'll simply change the price. So I just put the order in here under monitor. Slippage is gargantuan because FMC. Am I in the right stock? I'm on the wrong stock. Goodness gracious. I thought, no, wait a minute. Did I must not have hit send. Let me try that again. Back to monitor. There it is. That's weird. So the mid price is showing a debit until the slippage normalizes a little bit more. We're not going to see the actual mid price. Yeah, let's just take a look at the actual options here. The individual option spreads. 5 by 60. Okay, look at that one there. 0 by 470. So the slippage is just really too wide right now. We'll have to wait. I'm going to put the line in the water. I'll take the trade. If you want to give me 25 cents, I'll take it. Put a line in the water and then set it, forget it. Not necessarily forget it. Keep an eye on the stock, of course. But I got a line in the water. Am I going to get a bite? Maybe, and maybe not. Here's FMC going for 20 cents versus I'm asking for 50. So back to FMC, I'm going to adjust the prices a bit. Yeah, so FMC open here is it's actually lower from the open. So the question now becomes, how low will I go? So if I took 20 cents, which is what we could probably get right now, then my risk would be $4.80. So make $20, risk 480, not worth it. So let's leave it at 50. Maybe we get a lucky bounce. Now I'm going to show you the slides of what I just covered, and then we're going to go to Jessica's trade. So Jessica, if you could be ready with your analysis and tell us what you like about the trade you found. So this is grabbing short-term profits with gapping stock, usually pre-market using bar chart pre-market gaps. These are slides that show you exactly what I just did. And so you can go to barchart.com and then just check. I went through this whole process. Keep an eye on the percentage gap, the price. Make sure the price is $5 or higher. 10 is better, higher is better. There's Helen of Troy. That's the one we just did. I haven't looked at some of these other ones here. The other one you could look at China data. I got to look at it now. Let me look at that one. That could be a good one as well. Does it have options before I get too excited? It does. It has options. Slippage is about 30%. A little high, but that's not necessarily a no-go. I don't see any specific news on this one, just that tech stocks are higher. Let's see. Yeah, just there's no news on China data. The market value of their outstanding shares is at 2.9 billion. Wow. Maybe that's what is getting people excited about the stock. So then it becomes, where do I want to sell? Well, 7 would be a no-brainer. What can we get for 7? Selling a 7 put. Oh, we got a 750 put and a 5. These 11-day trade. Let's go to vertical. 750. Yeah, it's only 10 cents credit here at 750, which would mean our line in the sand is here. That's as close as I would get. And if I sell at 750, only 10 cents. So 10 cents on the width of the spread here, everybody, is $2.50, $2.50. So if you sold that $2.50 spread for 10 cents, your risk would be 240, nowhere near enough credit. Okay. And then we have the bears as well. Same thing on the bears. Okay, so here's the strategy guidelines, and you'll have these. This is what I just did. Identify pre-market gappers using bar chart. There's other ways to do that. That's a free site. You can do it. Verify the stock has options. Before you go into the rest of it, don't waste your time. This hasn't got options. You can't play it. Rule of thumb on the slippage is 20%, but I might go higher sometimes, depending on where the stock is and where the strikes are relative to the stock. And look for some really good or bad news. The good, the better or worse, the better. Is that a good sentence? I don't know. So verify with news. Ideally, you sell a 5-day credit spread or one, the options that expire on the Friday of the week you're in. Try to get at least 10% profit. Otherwise, maybe not worth it. Into the order within the first 5 minutes of the trading day. And then once you're filled, place a GTC order to buy the spread back for 10% of the original credit. And the stop loss, the hardest part is if the stock closes on the wrong side of the break even, meaning you're losing, then you close it out. Wait for a close. Don't hold on. This is the most important part. Although we haven't had to do this but one time over 32 trades, is you got to be really resolute that you'll do nothing unless the stock closes on the wrong side of the break even. And then when that happens, if that happens, well, when that happens, because it will, you got to get out. And you don't want to wait for another day. I'll wait another day and maybe the stock will go my way. That's human, but that doesn't work. So this is so important that you do that part. Be diligent, just let the rules run it. Get out of the way, follow the rules. You can also backtest this strategy. It's hard to backtest it, really. Let's check the chat box. Okay. So Jessica, what do you got for us?
I have two that I discussed with our team yesterday, and we just really couldn't find something to do with either one of these. The first one is Mattel, MAT. I think it's good. It's been going up, and I think it's going to go up even more with the Barbie movie that's all over the place now, and it opens up the 21st. So I thought, hey, why not hold it for a couple days after the 21st and then, sell it? But I don't know we didn't know what kind of trade to put on it.
Well, I like your logic that the movie's going to be a smash hit. But what if it isn't? So that kind of news is
I know, but having a teenage daughter or a young adult daughter and seeing how crazy they're all going over it and all the stuff here in Dallas, I wager it's going to be a hit.
Wager.
The movie itself might not be. I don't know.
No, I mean it's valid. That kind of news, like expecting a future product to be a smash hit.
Right.
That's
kind
of a guess, So
yeah, and it could be it could be bad. So
it could be bad. Yeah, it could be bad. But so then let's assume that's good enough news to go for it. We do have resistance in the way here, right around, well, that peak there, the highest close, I'd say 21 is resistance on this bad boy. So until it's at 22 or higher, I wouldn't come in on this one and sell a put spread. Wait for resistance to be breached on it.
So if it does breach it, what would you do?
What would I do after?
Yeah.
Bullish broken wing butterfly. Credit spread on this one wouldn't be bad. I mean, but I don't want to do it. I mean, the stock hasn't closed higher than here, which is 21 or so. So as long as this resistance level has been breached, I'd say 22, the stock's at 22, then come on down here and sell at 20. A put spread, for example, a short put spread, sell the 20 by the underlying, the next.
I just figured you'd be selling a whole lot of Barbies, in the next month. Anyways, okay, and then the next one is MU. It's tech and it's going down, but it should go back up again.
It should?
Well, it's a tech. I mean, they're doing chips and stuff.
Well, yeah,
I would like to add some comments there in that, because I was reading in one of the newsletter I receive every week about the markets and all that. And one of the most important things they were mentioning this week, it's about ChatGPT and a surprising significant decline in user engagement, because there's a lot of concerns about limitations, quality, regulations, and privacy. So they were talking a lot about, all this bull run and tech markets have been having. And it's more about a call to careful. I don't know if that's well say.
Yeah.
be cautious. Yeah. Yeah,
Yeah.
I mean, Jessica, I appreciate what you're saying. And Micron, if you look at Micron versus NVIDIA, I mean, they're two different charts. NVIDIA is
Right.
in their chips. Micron hasn't been performing anywhere near as strongly as NVIDIA. Now, counting on a sector to resume its bullish trend, tech, is one thing, but waiting until it happens is another. So here, don't jump in front of the train, wait for technicals to support your prognosis. And so far, there really aren't. So the stock has dropped hard over the last week.
Yeah. And so is
Now-
Avago.
And so what I would do is wait for there to be a significant bounce, maybe some good news and some volume. 60 is pretty good support here. We start getting a run up here, then maybe come in and sell underneath the 200-day average. So what we're doing here in Snipers is we're being more opportunistic. We're looking for technicals to confirm, and then we go. So we have a perfect technical setup. So we're not counting on any news being fulfilled in the future. We're not counting on a good movie. We're not counting on the tech sector resuming its bullish trend. Basically, we're guessing. So we don't do a lot of guessing in the sniper approach. We just look for stuff that has obviously made a big move, and there's some news backing it. And then we use all of that to gain our what we've had here, a 97% win rate in the sniper approach. So this is a new way to do credit spreads. And I've been doing credit spreads for years, 25 years now, or maybe longer, and never had results like this. And the reason that we're doing so well is we're using this sniper approach.
Gotcha.
We just want to pick, it's like picking low-hanging fruit, man. This is an obvious trade. Oh my God, I can't believe they're giving this to me. That should be in your psychology when you place these trades, like, good God, they're letting me do this.
Okay.
Yeah.
I'm learning.
Yeah, I know you are, Jessica, and thank you for offering yourself up. But you know what I would do with those? I'll call them loose prognoses, depending on something happening that hasn't yet. Is broken wing butterflies. Broken wing butterflies.
And guess what?
What?
We have Hedge Fund Live for that.
Oh, we do. When is that, Gerardo?
One of our most important products where people is learning a lot. Jessica is actually one of our newest students, and she has been doing great there. And we're having a game now on, so bring it there, Jessica.
Yeah.
Yeah.
I'll be there.
You have any more?
I am learning a lot, and I appreciate it. Thank you.
Yeah, thank you for putting yourself out in front of the community and offering something up. I encourage everybody to do that. We have a mastermind community at NWTC, and we haven't really tapped into that here. But if you have trades that you like, put them up and let's all look at them together. I've got one mind, and I've spent a lot of time doing this over the almost half my life. And so I have a lot of knowledge, but I don't know everything. I can't see everything. And collectively, we have a much bigger mind. The mastermind of our snipers community is bigger than mine. Any single mind. So if you have anything you like, please bring it forward. Now, Gerardo, we got 5 minutes and you were sharing some things with me before we started this morning. Would you like to share that with the group and we can talk a bit about it? Great job, Jessica.
Yeah, sure. Let me show you that. So I as I was talking, I receive every week market review from this platform called Infobot. It's free. You can sign up and receive every Sunday this. And they were talking about interesting things. I didn't read all this, but I was paying attention, especially to the USO. They are talking about the US oil fund has recently been put on notice. So this is an important thing to check because probably that will affect and hurt the price of USO and the ETF there. So that's a really interesting thing to check about it. And then, well, they were talking about a lot of things, but one of the other things, and I'm not sure if it's here, it's about Biden recently signed a presidential order or something like that about encouraging the government to start digging into the digital assets world with the dollar. So that'll be an interesting thing to keep in mind, I think, for all the crypto world and the US world, because if that happen, I think that'll be an interesting move there. So
Yeah.
those are the two most important things I found out today. So just a call to check for all of you. And actually, I have something I want to share. I have a poem today, Mike.
Oh yeah, let's hear it.
Yeah. I'm not sure I'm the best one to read it, but I will do my best. So it says, if I can move this out of here. In the world of stocks, a dance unfolds where AI and weather predictions take hold, energy, agriculture, and transportation too, all impacted by forecasts that are true. Insurance and risk management are precious domain. Weather-related risk can cause financial strain. SPIs, DIA, QQQ, and IWM, their prices fluctuate and market jam. Stay informed, analyze, and make your call. Invest wisely and watch your portfolio stand tall.
Oh, I like that. I like that. So this Infobot, I think that might be a good thing to share with people. And you've been getting the reports. Is it once a week it comes? How did they?
Yeah, they send
website?
it every Sunday. It's infobot.com. You can check in Google for that. They recently changed the platform and migrated to this Discord. So now it's a little complex, but in the past it was really nice because it's a markets AI. So you go there. Now you do it in Discord anyway, but it's not as easy as before. But you go there and put any stock you want to check, and it gives you a great report and an analysis about it. So I will highly recommend it.
Yeah, what's the website again?
Infobot. Let me paste that in the chat box.
Infobot. I like that Infobot. I'm gonna get on it myself. This AI thing is pretty cool. We've been generating new content for the upcoming rest of the year, and Infobot or ChatGPT has been a really great tool for us.
Yeah, it's infobot.ai. So you go there and you need to have a Discord account. It's one of those social media platforms and are gaining a lot of domain in markets. But if you go there, it's really nice, and you just sign up for the weekly report, and it's pretty cool. And another thing I want to mention, Mike, guess which week we are?
The week of our anniversary.
Oh, it's a week of our anniversary.
Yeah, July 13th.
So we send an email. We will be sending other emails this week, but I just post there. Oh, that's probably not the right one. Don't pay attention to that one. I was checking for the info and it changed it, but let me paste there the form so you can register to the event. We are having a really, really cool event this Wednesday at 7 o'clock, Mike, I think.
I don't know. Let me check.
Yeah, it's this Wednesday at 7 o'clock Eastern time. So please, you have the link there to register to the event. And believe me, you won't be there because we are having amazing things there, amazing things coming for all our community. You know, we are always looking for ways to make this better and better for you all. So please be there, be with us there, and see you there.
Yeah, we got some really cool things we're doing that are gonna be celebratory. We're gonna honor all of you that have been in the community, and we got some new things that we're adding, free additions to the offering, and then we have another new program we're gonna launch for those that are really ready to dive deeply and trade with me, live with live updates, live WhatsApp adjustment updates, you know, live.
Pineapple.
Okay, sorry. That's our code word for shut up, Mike. Pineapple. This is cool. I can't wait. We're gonna also release Dark Stratus. Matt's gonna do a presentation on his new system that he generated using the Darknet scanner and Tom's tools. Too much, Roberto?
Yeah, the second phase of Pineapple, if it doesn't work, it's mute, Mike. I don't want to do that, but apparently I will have to.
Yeah.
Excuse me, I have a question, guys.
Yeah.
So I was trying to sign in, but it requires a Google account to register for that 1 year anniversary. Is that correct?
It should require just an email, but I will check that and fix that right after close this call, Peter.
Yeah, because that's what prompts me into that I have to have a Google account to sign in.
Okay, yeah. Check in half hour and it'll be fixed.
Okay, cool. Thanks.
Thanks, Peter.
Thank you.
Mhm.
All right. Well, I think that's a wrap for today. We don't have any new trades, which compels me to take a look at one I was saying before. Yeah, let's do, see, I'm thinking out loud and it's not working. It's not very good educational. But I was saying earlier, a put credit spread on the IWM. The only thing that I would be a little concerned about is the Wednesday and Thursday reports, CPI, PPI, and jobs report. So that could drop the markets. So it's best to wait. But you know, one trade that I think is fairly interesting here is selling, you know, maybe the 179, 178 put spread. And so it's a little bit of a gamble in that we don't know what's really going to happen. I don't think it's going to be too much of a surprise. And then I'm looking at options that expire on Friday. And if I want to sell at 179, there's no premium there anyway. I'm just looking for premium. We sold at 180. Sold the 180, bought the 179. There's only 4 cents there on a dollar. So it's 96 in risk, which is not enough return. So unfortunately, that one's not available. All right. Well, if you're in the Snipers live thread and you see any trades, let's start using the power of the community. If you find sniper candidates, please post them here. I know some of you do that. So this is a nice little tool for you to band together as community and find your own sniper trades. So with that, Gerardo, unless there's anything I've missed, we're going to wrap for today. Anything else?
That's it. The form situation is fixed now. So those of you without a Google account, then you can go ahead and sign up.
Hey, look what happened. Thank you, Gerardo. What took you so long, man? Paulina got into the IWN credit spread for 9 cents. It's at 2 cents now. Paulina credit spread. I don't know how to say your last name. Kozic. Paulina, the credit spread master, just netted 7 cents. I'd pull that off for a penny. Yeah, I mean, especially before Wednesday. I'd be out of that by Wednesday. You've already got 7 cents. So I would, you little profit, or yeah, absolutely, absolutely. Cleo says, thanks, Mike. Okay. Pineapple, pineapple. Whoop, whoop, whoop. All right, everybody, we have earnings coming up today at 2 p.m. Eastern. So if you're in that fold, please join. We'll see you then. And then hedge fund people will see you tomorrow at 3 p.m. Eastern for Hedge Fund Live. Lots going on. We love you. Have a great week. We'll see you next Monday.
Bye.
Bye, everybody. Have a good day.